It's about that time of day again. My name is Joseph. Thursday evening, May 31st. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a big spike in channel pattern, telling me to look for selling opportunities using buyer failures up in the battle zone tomorrow morning. The S&P is range bound, and after two attempts to go lower for the bears, my plan is to look for buying opportunities on the way back up into that range tomorrow morning. Nasdaq is bullish with a spike in range pattern, and I have my eyes on the pendulum swing for the most reliable buying opportunities tomorrow morning. Gold is range bound with a megaphone pattern, right? Also known as an expanding triangle that tells me to focus on failures at the edges of the range for the most reliable opportunities tomorrow morning. And of course, we can't forget about the euro. The euro is bullish with a spike in range pattern that tells me to focus on seller failures for buying opportunities at the low of the range tomorrow morning. Well, we're headed into the biggest news of the month of June. That's right, tomorrow is the first day of June. And of course, we're going to kick off a new month of June. No shortage of excitement. We got Non-Farm Friday tomorrow morning, which is notorious for being some of the most challenging, most difficult price action we're going to see in the entire month of June. But not to worry. I have a solid plan of attack to find the most reliable trading opportunities for Friday's session. But before we get into charts tonight, I need to remind you, if you're watching me on YouTube this evening, you can find the entire detailed written description of this entire strategy written out here on my blog at sidewaysmarkets.com. If you have any questions about anything covered in tonight's video, please remember, you can post those questions in the comment section below the YouTube video. And if you like what you see, please help support this channel by subscribing to my channel and make sure you hit the bell icon so you get notified every time I publish another video. And if you really want to stay in tune with everything going on here at School of Trade, head over here to the blog at Sideways Markets. This is where all the action happens every day, and make sure you join our mailing list. Give me your name and your email address, and I'll shoot you an email every time I publish something new. That way you're always up to speed on all the great content we send out every day here to our clients. Also, don't forget, I'm always posting charts, links, updates, quotes, all kinds of different topics that are trading related, successful lifestyle related. If you love my newsletter, make sure you follow me on social media. You will not be disappointed. Whatever your favorite flavor of choice is in the lower left-hand corner. And then how about some charts from tonight? If you're not with me tomorrow morning in my trade room, right, the next best thing is to grab those charts and have them ready for your trading day tomorrow. You can download all those charts right below the video tonight on the blog. And then speaking of tomorrow, what are you waiting for? Grab that free pass. If you're not a member here at School of Trade, I got a free pass for you guys. Come out and join me as a guest in the trade room. Grab that free pass in the upper right-hand corner. And if you have any questions about anything, don't forget you can always drop those questions in the comment section below. Or, even better, hit me up on live support. I'll be happy to answer all your questions there, or call me in the office. Our toll-free number is on the homepage of our website. All right, let's jump right in. I know I'm running late here tonight. I apologize for being a little bit late to the party, but a busy week, busy afternoon in the office, and I'm glad to be here, though. As always, I'm committed to sending out my newsletter, though, every evening. So let's keep going. Tomorrow morning, Friday, June the 1st. It is the first Friday of the month, and it just happens to be the first day of the month as well. First Friday of the month, we have the non-farm payroll report. This is, in my experience, this is some of the most difficult environments to trade all month. And, you know, we only get this once a month, right? It's the first Friday of every month. It's the employment situation, better known as the non-farm payroll report. Now, this little gem of a news report, right? Hourly earnings, obviously the employment number, right, has new jobs added, right? It's going to have the employment rate tomorrow. This jobs report has its tentacles in everything. It affects everything, right? So really no markets are safe from this. But out of all the markets, the most dramatic reactions tomorrow will be euro and gold. S&P, or the E-minis and crude oil will definitely be affected, but not nearly as bad as anything tied to the US dollar, euro, of course, right? Negative correlation. Gold, of course, right? Negative correlation. So gold and euro are your big heads up for tomorrow. It's not going to be an easy session around that news report. Okay, the other thing you want to be aware of tomorrow is, in my experience, and I hope I'm wrong, I'm not saying it's a guarantee, I hope I'm wrong on this, but typically on a non-farm Friday, you're going to have really slow price action before the news comes out, so leading up into it. So be careful in the overnight session, right? The news will come out, and then it's usually going to be, the news will come out either within expectations or outside of expectations. If it comes in within expectations, the market is most likely already priced in the expectations, and we usually see a relatively sluggish, slow session. If the news comes out outside of expectations, either too higher or lower, then traders have to scramble and manipulate their positions, to account for this news, and things get really wild, really wild. So in my experience, the market is either going to move too slow or too fast directly after that news comes out. If it moves slowly, give it some time. It will eventually kind of shrug off the analysis paralysis, and we'll make do with whatever we've got left in the chart. If it moves really fast after the news comes out, same thing. We got to wait patiently, let it kind of work itself out, and then go from there. So in my experience, it's either too slow or too fast, and generally speaking, the window of opportunity on non-farm Fridays is very small. It's usually going to be between 9:30 and 11 o'clock tomorrow morning. Again, I say 9:30 because the news comes out at 8:30, and a lot of times that 8:45 to 9 o'clock, you've got oil opening up at 9, and then E-minis open at 9:30. So it can be kind of a lost hour there for the first hour of the session, just as traders kind of wait and see what the market wants to do. Be very careful trying to predict. If it's moving real fast tomorrow morning, please promise me you're not going to go just throwing your money out the window. There are so many better times of the month of June to make our money. We don't need to do it right in the wake of that number tomorrow. All right? And I know a lot of traders like to trade the news, but my personal strategy is I wait and I see what it wants to do. Too slow, too fast. Give it some time to kind of even out. And don't push it tomorrow. Fridays are always difficult when the market doesn't move very well, because it's difficult to walk away on a Friday. I always have a hard time closing up on Friday mornings. I know I'm supposed to be early in, early out on Fridays, right? We talk about that every Friday. Early in, early out. We don't want to be trading the afternoon on Fridays. It's not a good time to be trading. Traders take bigger risks. There's lower volume in the afternoon. Not a good time to be trading in the afternoon on Friday. So it's really going to be, 9 to 11, 9:30 to 11 tomorrow. Oftentimes, we only get about an hour of good, decent, tradable price action on non-farm Friday. Like I said, I hope I'm wrong. I really do. Hopefully, there's amazing price action for us overnight, London, right, in the early part of the U.S. session. And hopefully, the news comes out, right, a little bit of shake and bake, and then we're back to the action at 8:45, 9 o'clock. I hope that's the way it goes tomorrow. But historically speaking, it's not usually the case. It's usually a time for really volatile, unpredictable price action, and honestly, most professional traders, they don't even touch non-farm Friday. If they do, it's very, very light, quarter position, third position, and they come back on Monday, right? And that's what I want you to be thinking tomorrow. Save your bullets for what I call Reaction Monday. It's the Monday following non-farm payrolls, right? In the last 6 months at least, the Mondays following non-farm payrolls have been big, strong, juicy, tradable trends, right? How's that for a reason to protect your capital tomorrow? So be careful tomorrow, right? That's the moral of the story. Be very, very careful. Do not try to fade markets that are running, right? Because the market will run you over tomorrow. Tomorrow is the widowmaker, right? Tomorrow is a day that will run your account down to zero, right? If you allow it. So please, please, please be careful. So hopefully by now I've scared the pants off of you for tomorrow, and you'll trade carefully. That was my job this afternoon, was to make sure I instill the fear of a margin call with you tomorrow, because I wish somebody would have cautioned me ahead of that when I was in your shoes. So early in, early out. Don't be a hero tomorrow. We've got other news, but that's the only news that matters tomorrow. It's the only news that matters is that employment number. We got the ISM number at 10 o'clock, but honestly, that 10 o'clock is probably going to be when you get the best price action tomorrow. Again, 9:30 to 11 o'clock. And again, hopefully we'll get it earlier than that, but typically it's that 9:30 to 11 o'clock. And then again, I don't trust the afternoons on Friday to begin with, because end of the week, we tend to have bigger risk taking. There's lower volume. Professionals aren't trading during that time, right? You're trading next to rookies and retail traders on their cell phones, for crying out loud, right? So be careful tomorrow, right? And I'll get down off my soapbox now. We'll jump right in, right? So tomorrow morning, 8:30, right? Employment number, right? Be careful. All right, let's jump right in. Starting off tonight here, we got crude. We got some S&P, we got some Nasdaq, we got some gold, and of course we got a lot of euro here. Some beautiful, beautiful charts here for tonight. And I'm going to break the charts down with you guys. But as I said before, we get some big news tomorrow. We get some, big news tomorrow. So I'm going to do my best, but be aware tomorrow morning after that news comes out, this news could just wham, it could break everything apart, right? It could reverse. So everything I do tonight, take it with a grain of salt, so to speak, right? Just be aware that tomorrow morning, when that news comes out at 8:30, it might blow right through everything we've got laid out today, and we may need to, wait for it to settle down and then readdress the charts, find new trends, find new channels, find new ranges, right? Find new targets and go from there. Hopefully I'm wrong, right? But that is oftentimes what happens on a non-farm Friday. All right, starting off tonight with crude oil. Crude is bearish after a wild ride in today's session. Went down, then up, and then back down again. The bears have control going into the session close with a spike and channel pattern to finish the session. And that tells me to focus on selling opportunities using buyer failures up at resistance levels in that battle zone tomorrow morning. Now, let's kind of break this down here. We know we have a strong move down. We know the buyers sure had a real good opportunity to take control, right? And they just whiffed on it, and it collapsed back down. This, of course, was inventories this morning, if you recall, at 11 o'clock Eastern time, right? That all happened right there, right, during that inventory report, 11 o'clock. So 11 o'clock inventories, I told you inventories are all over the place usually, right? So we slammed lower. It wasn't really a slam. It was kind of a grind lower. We slammed higher. The buyers, of course, failed, right, into strength into pullback, right, and pullback back down. We talked about that pattern last night, right? So it's obviously a bear market, right? Obviously a bear market. The most important pattern that I see right now is this spike and channel pattern, right? Spike and channel patterns always tell us to go up, right, and then back down again, right? We'll dig into this more in a moment. So spike and channel pattern says go up. Look for selling opportunities up at resistance, right? And target is back down, right, at that low. What else do we have here? If we zoom out a little bit, you'll notice we have some higher lows, right? Some higher lows. I'm drawing a trend line in here, as you can see, right? Trend line down off the highs. And this creates what could be the most important clue for tomorrow, right? Basically a triangle or a trading range. Not a huge surprise as we go into a brand new month. So a triangle, possible trading range right there for tomorrow. Another option here. Strong move down, pull back, strong move down, right? A possible channel. I'm using this trend line, right? These trend lines drawn off the high, connected down to that low. This is a possible, right, a possible channel down here as well. Now, out of all of these clues, the channel is by far the least reliable at this point. We don't have much more than just that trend line to go off of. So if there's one thing here so far that you don't have to worry about too badly right now, it is that big channel. Okay, let's dig in. So now that we know the basic principles here, right, the most important thing is this spike and channel. And we talk about this quite a bit, right, in this nightly newsletter. Whenever I have a spike and channel pattern, spike down, right, starts going sideways inside of a channel, what I always start looking for is I look back at the beginning of that channel, right? And I look for selling opportunities up around the beginning, right, of that channel. The bottom line is, anytime you see a spike in channel, you know that everybody's already short. It's a big move down, right? Sell it, sell it, sell it. Everybody's already short. And so usually when a spike in channel is deep into that spike in channel, right, usually we're running low on bullets, right, for sellers, right? Sellers need to reload. And where would they reload? Yeah, they'll reload at a higher price, right, because sellers want to sell high. So we're looking at this now as a spike in channel, right? So here we are. So spike down, right, into that channel. And you'll notice, right, I've got these swings marked up here, right, and up here. So this is where we have some short-term selling opportunities to go up and then back down we go. And I would assume, right, this trend line, this larger trend line here, I would assume that's going to be a pretty easy and relatively good target here for those sellers. So my plan is to go up and sell it back down here. How do we do that? Well, I'm looking for basically 3 different types of patterns: traps, failures, and pullbacks. Okay, now, one of my favorite ways to trade is to combine a trend line with a trap. Okay, now watch these 2 spots I'm marking up here, because this is where we have the first opportunity. We go up, right, for a trap high, for a strong signal candle coming off that trap, right? That's going to be the first one. Then we pull back to the moving average. Now at this point, the market's bearish, right? Market's bearish. We're going to have buyers that are going to try to buy that pullback, right? Just like those buyers tried to buy the pullback here, right? And they failed going back down. I'm looking for something very similar, right, to this pattern right here. I expect to see buyers try to buy it up. When they buy it up, now we know where their stops are. And their stops will be right below that swing. This sets up for the second pattern, a failure pattern, right? That's number 2. Okay, now, once with a failure, what happens? The buyers who are trying to buy, they get stopped out, right? And the market runs lower, because when you get stopped out as a buyer, you become a seller. What happens now is you see a strong move down. That brings the moving average over. And now we look for pattern number 3, and that is a pullback pattern, right? So trap, failure, into pullback. Trap, failure, into pullback. You can see a very similar situation back up here where we go up, right, off the news. The buyers, you can tell they try to buy it, big wicks there, right? It fails, strength move down, pulls back, right, and goes. Very similar to what we're looking for. The one thing we didn't get earlier, we had this beautiful chance for a trap high into a falling resistance. So that's going to be a great, again, right, it's not going to happen every time, because you've got that trend line combined with that swing at 56. That's a trap. Then wait for the failure, right? Wait for that failure, right, coming back down, and then, of course, right into that pullback. Now, I realize that many of you guys and gals are probably here for the first time today, and so I want to make sure that if you're here watching for the first time, I want to make sure you get the most out of our time together. I'm going to talk more about all these patterns as we go over the S&P, the Nasdaq, gold, and euro. But real quick, if you're here for the first time today, or if you haven't done this yet, grab a free trading class in the upper right-hand corner. I can't go over everything in this short newsletter that we do every evening here on our blog, but I do want to make sure you get a deep dive into the patterns we use, the terminology I'm using, the analysis that I use, just so you can get a much better experience with me, right, on this nightly newsletter. So pause the video. I'm going to be here when you come back. Don't worry, right? Pause the video, grab that free class, right? You'll see that information icon in the upper right hand corner. Register on my website for that free class. I'll send you that free trading class, and that way you can learn more about all the patterns that I use, and then you'll really be able to benefit from this nightly newsletter every time you join me here. All right, that's the plan here. So we go up, trap, failure, strength, pullback, right, back down again. Now the next thing is, what if price goes lower? right? What if we don't get that trap into failure, right? What if this thing just rolls right over and goes lower? Well, if it rolls over and goes lower, we have to be careful. We have that trend line down here, remember? That trend line is going to be a little bit tricky. In fact, you can already see the sellers were eager to take their profit at that low. So I have to think, right, the next attempt to go lower may bounce right back in my face there. So what I'm going to be careful is, if the market runs lower like this, right, if we try running lower, promise me you're not going to try to sell down here. Anytime I find myself in a position where the only option is to sell at support, I look for what I call a trap pattern. And that means I'm looking to get back up and sell right up around here. Again, try to use that trend line to your advantage, right? And get that sell up around that trend line, up above a prior swing. Okay, it's the same principle as if price goes higher, right? But if price goes lower here now, don't take the bait down here. Wait to get up, right, and sell it back down again. Okay, we'll wait for that pattern again, combining that trend line back down again. All right, so those are the key components here. If price goes up, certain patterns there. Price goes down, we have reason to believe we have some major support lying down there, and I got to be careful about selling short. Last but not least, what would it look like for a reversal? Tomorrow's big news day tomorrow, right? What would a reversal look like? A reversal has three things to it: strength, a pullback, and strength. I call this a 1, 2, 3 reversal, right? That means we get a strong move going against the trend. The pullback comes over, right? Pulls back to the moving average. Now remember, right? If this fails, we're going right back down. So this one back here, right? Strength, pullback, failed, back down again. Remember, don't buy the first pullback. Wait for the second leg here now. Now you've got strength, pullback, strength. Now we have enough proof to call this a bull market. Now, find those new highs, connect those highs, down to the low, create that channel, and then look to buy the low of that channel. And usually what will happen is you'll usually find that buy somewhere between that prior swing, right, and the low of the channel, right? So you'll pull back, right, look for a buying opportunity down around those lows. Okay, that's the most reliable way to trade a reversal. Okay, you can try to mess around by trying to predict, right, that first pullback, right? But look what happened back here. We see this all the time. Bear trend goes up. You think it's guaranteed to be a bull market, falls flat in its face. So be careful trying to trade that reversal. Okay, get to it early tomorrow. Remember what I said. Get to it early tomorrow and watch that news. Okay, get a plan for up, down, right, and of course reversals here. Let's keep going. How about some S&P? S&P is range bound and trading with 2 tries below the low of the range, telling me to look for buying opportunities going back up into the range tomorrow morning. Now, we talked about this in last night's newsletter, right? We've got this kind of massive multi-day kind of prior week range, right? It's between 26.5 and 13.5 right now, right? We went back up into that range, right, in last night's session. And if you recall, we were looking for opportunities here to 1 try, 2 try, failure, and then back up in. Well, you'll notice, right, we got some easy scalps here, right, in the early part of the afternoon. 1 try, 2 try, failure, pull back and back in, right? That's the exact same pattern I just illustrated for you on oil. But you'll notice they failed to get the job done, right? They couldn't rotate it back up into that range. This is for some reason here. Hold on 1 second here, guys. Let me just draw this in so I'm not battling with that setting in NinjaTrader. We'll come back and fix that later. Okay, so there's my trading range. Okay, so I have my trading range now. Now this is all about reading context. So at first glance, again, we get that trading range. We're below the range. But at first glance, this market looks very bearish, doesn't it? It does. I mean, look at that strength going lower. We got a big strong move down, pulls back again, beautiful looking channel. Okay, at first glance, you think this market, oh, it's bearish, right? And it is relatively bearish. But look at the top of the channel right here. What happened? Why on earth did we not fail, strength, pull back, and back down? Look, right here, you can see they got their buyer failure. They ran it lower. They pulled back to the moving average, right? This is that same pattern, right? Up, failure, strength, pull back, and go. We talk about this pattern over and over on this newsletter. right? So they had that pattern served to them on a silver platter, right? And what happened? Nada, nothing, right? Zero. We couldn't go back and retest that low. So this leads me to believe there's something else out there pulling strings. It's got to be this trading range, right? Market looked really good. When they failed to retest that high, right, market looked really good here going lower to make another leg lower. You know, usually when you see a big strong move like this in one direction, normally you see a two-legged pullback and a retest of that low, right? Anytime you see a strong move in one direction, two-legged pullback, retest that low. Strong move in one direction, two-legged pullback, what happened? So again, we're not seeing what usually happens when you see that much strength to the downside. What's the explanation? It could be non-farm Friday tomorrow. It could be the end of the month, but it's probably this trading range. So I'm expecting this market's going to want to go back into that trading range tomorrow, pending it, of course, right? Any unexpected news tomorrow morning ahead of that non-farm payroll report. And basically what we're looking for here is it's too bearish right now to be a buyer, in my opinion. You know, you don't want to fight the momentum of the market. So what I'd like to do is I'd like to wait for the momentum to turn in my favor and then find the pattern from there. So what's likely going to happen here is we'll eventually, for the buyers at least, see a strong move going back in. When we see that strong move going back in, you want to start thinking about how can I get in below the low of that range. Okay, and this is where, right, some creative kind of prep work, right, comes in handy. So again, I have to wait for a strong move up, whether it goes down first and then strong move up, whatever the case may be, right? Whatever the case may be. But let's just say both scenarios here, right? One scenario, we jump up, right? We jump back up into that range. Now at this point, I'm going to draw a trend line off of that high, bring it to that, right, to that low, and I'm looking for a buy down off the low. The key tomorrow is going to be if it jumps, you try to get in below that 13.5 area, or, you know, at least at the 13.5. But don't try to get into it, right, if it's back inside that range. Really try to get in as low as possible tomorrow. That way you can leave a runner and capitalize on that big move going back at the high at 26.5. All right. Now, if it head fakes down, right, and then jumps back up in, right, it head fakes down and then jumps back in, what will probably happen is it'll probably give you something like this. Find those prior swings, and then look for that, again, support trend line, right, try to get in below that range low. Again, it's kind of tough for me to predict this because I'm expecting to see some craziness tomorrow around that major news. Okay, so again, two scenarios here, right? Up, right? Nice strong move up, pull back off that high. Don't buy there, right? Wait now, right? Wait now for that deeper pullback, right? And find that it will probably end up being a seller failure into strength into a pullback, and then a pullback, right? Going higher from there, right? So seller failure at the low, right, into pullback, going back up. And again, you want to learn more about channels like this, right, failure patterns, strength patterns, pullback patterns. Grab that free trading class in the upper right-hand corner, right? That way you can learn more about these patterns here for tomorrow. All right, so that's the plan, right? If price goes higher, price goes up, I want to see it pull back, right? And then try to buy, you know, using this area here up, right? Buying. Or, right, if we do go down, head fake, back up, again, still trying to buy the low of that range, right, to hold this, right, to hold that runner back up, right, into that range. Now, if we go lower, I'm going to have to see some real strength going lower here. For me to really trust this market going lower, I have to see another strong move down, right? And if we do see that strong move down, then we're back inside this channel, and we can continue to use this channel. This time around, we can use the measured move as resistance, right? And we can look to sell up around those highs, right? So that's the plan for tomorrow if price goes lower, right? As it goes lower, I want to see it really strong, all right? Don't even think about selling it if it just runs back down to that 2,700, right? It's got to go through it. Then give us a shot to sell off that high, right? And we'll keep using another measured move, right? Which, of course, if we measure this leg there, right? That was the first leg down. Here was your second leg down, right? There's your third leg down, and that will now be your next target, right, as we go lower, right? So if we do end up going lower, right, don't chase it, fade it, right? Sell high, right? Don't sell low. As I say every night in my newsletter, right? We don't want to sell high. We want to sell low. Again, though, my gut tells me again, they had this on a silver platter. They couldn't make it work. We should be going back into that range. No matter what happens, my focus is buying that low. Try to get it down, right, and buy that low. It may end up spiking in and going sideways here. They love to do this on news days. If that happens, wait for it. Wait for it to pull back. Trust me, you'll get it. You'll eventually get it. We may not get it when we want it, right? But we'll get it eventually, and we can buy as close to that low as possible right there tomorrow morning. All right, that's the plan there on the S&P. Let's keep going. That's a nasty one there on the S&P. Nasdaq looks like a puppy dog right now compared to the S&P. Nasdaq's easy, right? Nasdaq is bullish with a spike and range pattern. And that tells me to focus on buying opportunities down below the lows of this range tomorrow morning. As you can see here on the Nasdaq, we have a very strong move here, right, that now is going sideways. Right, strong move now begins to go sideways. Now, we've talked about this a few times already this week. I believe it was this week already, and that is a spike and range pattern. Anytime we see a spike in range, we want to follow the direction of the bias, which means, in this case, a bull bias going in. We have a trading range, and I'm looking for basically two patterns here. I'm looking for a buy pattern down at the lows, using what I call the 2-try rule. 1 try, 2 try, and a move back up. Right, again, bears try once, bears try twice. I call this the 2-try rule failure. The second pattern now will go through these highs. Moving average will now follow. Moving average has to clear above the top of that range, and then I look for a 2-legged pullback. And I call this the fake out, breakout, pullback pattern, because the second leg is oftentimes confused with a reversal back into that range. Okay, so I call this the 2-try rule, a 2-try failure pattern, right? And I call this one the fake out, breakout, pullback pattern. Again, you want to learn more about those. If you want a deeper dive into those patterns, right, grab that free trading class in the upper right-hand corner, right? Grab the little information icon. You can learn more about those details. Now, this is a relatively narrow range. We talked about this earlier this week. When the ranges are relatively narrow, you can be pretty aggressive. You can go 1 try, 2 try, back up in. If this range was much wider, you would need to go 1 try and then 2 try and then back in. The bottom line is, when the range is small, you look for small 2 tries. When the range is large, you look for much larger 2 tries. This is a small, narrow range, which means we'll look for a relatively small, right, 2 try. The hard part right now is we're right smack in the middle of that trading range. So I don't want to trade the middle of the range. I want to buy below the low of that range. Okay, so we're talking a lot about this range right now. I take the amount of the move above the range, I move it below the range, and that creates a key support level. In fact, you could say, right, with this trend line coming up off the lows down here, this long-term trend line, you could really say that this whole area down here, right, is ripe for, right, a buy zone, right? You could say this whole area down here is ripe for it, right? Kind of put that in there too, right? It's going to put that in, right, along with, yeah, there you go, right? You basically call the whole area down there, right, a good buy zone, right? A little Bob Ross there for you guys. All right, so we have a little happy little buy zone down, have a little battle zone down there. So again, we got the narrow range, right? Narrow range means what? You can be more aggressive on your 2 tries, 1 try, 2 try, back in. Right? If it's a wider range, you got to wait for 1 try and then 2 tries and then back, okay? All right, we'll go into more details about that in the free trading class, and of course, we'll trade it tomorrow in the trade room. So we're looking for a 2-try rule. I'm looking for that pendulum swing, right? The amount of the move higher, back down, move lower, right? So we swing up, we should swing back down, same amount. I'm looking for, right, a move down, 1 try, 2 try, and then back up. Usually, it'll do something like this. right? It'll slam lower. It'll look like it's never going to stop going lower. It'll scare the bejesus out of everybody, right? It'll pull back to the moving average, and what's going to happen? Sellers will go, yeah, let's sell this thing. Sellers try to sell it. Yes, exactly like that too. They talk exactly like that. It's a bear's accent. I'm kidding with you, right? Those bears, right? Those bears fail. What happens? Bam, right? We break back up. But we don't want to trade this back higher, right? We want to buy high. What do? We want to buy low. We buy the pullback going back up, right? So there's going to be two patterns here. One is a seller failure with the 2-try rule. 1 try, 2 try. 2, we don't buy here, right? We buy low. We don't buy high. That's one of the reasons why my trade room is such a great investment, right, in your time, because I'm not going to let you buy high. I'm going to make sure I am in your ear saying, don't you buy that, don't you buy that, right, buy at support. It's one of the big reasons why, right, our clients love our trade room so much. I keep them out of trouble, because when you're a new trader, it's just you'd be amazed how difficult it is to simply follow rules when the market's moving and there's money to be made, right? Human beings just aren't wired to be great traders, but that's another story from their time here, though. So those are the 2 tries looking for. Now you can see an example of this right here. You can see a prime example of this. We go up, we pull back. Buyers try to buy it. You see the green candle right there. Buyers try to buy it. They fail, slams lower, pull back in, right? So 1 try, bears try to sell it. It fails, pull back and back in. Most important thing is try to buy as low as possible, right? You don't want to get involved in the middle, okay? Narrow ranges mean get that heck out of the middle, right? Get out of there. You don't want anything to do with the middle, right? Get it down here and buy it up from there, okay? Now, the next part is obviously if the price goes higher. If the price goes higher, here's where things get tricky. Okay, we've already seen the buyers fail above those highs here. So when the market goes higher here right now, it's a bull market, right? So selling off the high, 1 try, 2 try, failure, pull back, go, right? It's going to be the same pattern we look for at the lows, but now we want to go back to the highs. So here's what I do, right? If I'm trading 5 contracts or 4 contracts as my normal position size, I'll trade a half size position if I'm going against the trend, or a quarter size position, or 1 contract, for crying out loud. So if the market's bullish right now, I'll have a full position size, right? I'll load the boat buying below the highs. Sorry, buying below the lows. 1 try, 2 try, failure, right, and back in. But if I'm trying to go against the trend, 1 try, 2 try, back in, go 1 contract, 2 contracts, the minimum size. Cut your normal position size in half. And if you're on 1 contract already, okay, then you don't want to take those trades. Okay, if you're trading 1 contract, or if that's your position size, and you're saying, well, Joe, I can't do anything less than that, then that's your sign right now that you shouldn't be touching counter trend trades. Okay, easy math, right? You can't cut it in half. If you can't cut your position size in half, or if you can't at least go down at least to a 1 contract position, that is your sign right now that you're in capital preservation. If you're on 1 contract, you're on capital preservation, which means no counter trend trades. Capiche? Okay, so again, careful at those highs. But what if we go higher? How do we know if the market goes higher? Well, remember, what we're looking for is 1 try, 2 try, back in. Okay, 1 try, right? 2 try, keep going. If the market keeps going through that high, okay, it's easy, right? If the 2 try rule is successful at going through those highs, well, heck, now we're bullish. So what do? Connect those 2 highs down to that low, spike and channel pattern, hidden channel pattern, whatever we're going to call it, right? And we're buying the low of that, right, of that channel. Hey, maybe we get lucky, maybe it lines up with the high of that range too. Probably not, right? But focus on buying the low of that channel. Okay, so again, I'm not trying to predict a breakout here. I'm waiting for a breakout. Then I look for the buy right off of that low. This is critical. Okay, these are those little times where you can give back all your money because you get wrapped up in the excitement. Okay, so on the Nasdaq right now, if it goes lower, 1 try, 2 try, back in. Stay away from that middle. Goes higher, 1 try, 2 try, back in. Half, quarter, third position size, right? 1 contract maybe. If it keeps going 1, 2, and goes, hidden channel, right? Buying at the low of that channel. All right, that's the plan. And if it sits inside this range, You do nothing, right? Nada, right? You do nothing. Okay, and again, we'll wait and see how this thing goes here tomorrow as that news comes out, right, tomorrow morning. All right, let's keep going here. We got a lot more to cover here, and we're running late on time. I'm late here to begin with. How about that gold? Boy, that gold got all banged up today. What an ugly, ugly mark this has been this week. Gold is range bound, of course, with an inverted triangle pattern, also known as a megaphone pattern, telling me to focus on buying low, selling high, and avoiding the middle of this expanding range tomorrow morning. Now, the most important thing right now is we have a megaphone. We have a megaphone, an inverted triangle, an expanding triangle, whatever term you want to use to call this. We have a triangle that began this week. This, of course, by the way, is the 818 contract. Don't forget, we did roll over yesterday morning on that. And you'll notice, right, we got exactly what we bargained for. We focused on that battle zone from last night's newsletter. Price went up, one try, two try, failure, back down in, right? One try, two try, failure, back down in. So, you know, if you watched last night's newsletter, you were ready to rock and roll today on gold. So good. I'm glad to see a lot of you guys. Got a bunch of emails from you guys today talking about gold. So really happy that you guys are ready for that. Most important thing now, though, is that when we have an inverted triangle, or as I call it, a megaphone, right? Price goes from top down to bottom, right? It's a triangle, right? It then gets all crazy like, and then comes back in, right? And starts running from top to bottom here. Okay, so we're now on the other side, right, of that triangle. Okay, the good news is that the range gets wider as we go. That's the good news. Okay, as opposed to back here, we talked about this last night, right, where the range gets narrower, right, and that becomes a challenge. Okay, so the good news is the range is getting wider right now. And what I want to do is I want to sell the highs, I want to buy those lows. Okay, the hard part is staying away from the middle, right, because the middle is where there really isn't anybody. Well, you know, the buyers are buying off the lows, the sellers are selling off the highs. There's not a lot of consistency in the middle of the range. So what I do is I put a little midline on there, right? And I try to sell it back to the midline. Try to buy it back to the midline. Okay, can you use that midline as your magnet? So as we go forward here now, you can see there's that midline. And you can see, right, this is the same chart from last night, right? Nothing different. Same chart from last night. You can see how it just kind of gets sucked back up into that midline here. Okay, now we know the plan here, right? We want to go down, buy off the low. We want to go up, right, sell off the high. Okay, now listen closely on this, because the most challenging part about a triangle, an inverted triangle, is that it gets wider. Okay, now I talked about this briefly earlier. When the range is narrow, we can be aggressive with two tries, right? When the range is wide, we can be more, right? We have to be more patient with two try. So, for example, as the market now is going lower, right? We got to lower this range down here. As it goes lower, it's building steam, right? It's building momentum. When it gets down to this low, I can't just buy it. Right? It's probably not going to just reverse on a dime like that. It's probably going to go down, come back, try again, and then I can be a buyer. In other words, because the range, and again, this is so important, but a lot of people can't really appreciate this until they mess this up. I learned this the hard way many years ago, and I always kind of think about this whenever I have a trading range. This is a trading range. Okay, the problem is it's so wide right now, right, that as it goes lower, it's got a head full of steam on it, right? It's a freight train. And so I can't just buy the low. I have to wait for it to go down, right? It'll pull back, right? And then it will try again. Once that one starts to go higher now I can start buying that. Again, one try, right? One try, two try. One try, two try. Okay, so don't be foolish and try to buy that first one, because it'll probably come back to stop you out and then go without you. Okay, now what happens is, right, we go down, one try, two try, but we then go back up and look, now we have a freight train going higher, right? There's a ton of momentum now building. Okay, we'll look for the failure off of that low, two-try failure, into a pullback, but get into it, right? Get into it as low as you can down here, right? Because you don't want to try messing with it, right, in the middle or as the price goes back up to those highs. Okay, because that's where you're going to start seeing profit taking. You'll start seeing sellers up there. Then the hard part is getting it to collapse off that high. A lot of times when we see the really wide triangles like this thing never turns, right? It tries to, right? It tries to go lower, but it ends up blasting higher anyways. So remember the rule of thumb. When it's a wide range, one try, wait for it, second try, and then go. Okay, if it goes back up, okay, it's going to have a big head of steam on it. You don't want to try to sell that high. One try, two try, right? Let it try that second attempt. And if you got some guts on you, right, if you're a gutsy trader, you can buy that second try. Because a lot of times you've got sellers who are trying to foolishly fade that high. But again, the momentum of the market is going to be really strong once it rotates back up. Okay, so it's one try, two try, back up into that range. If we do go back up into that range high, right, be very, very careful. One try, two try, and then we can look for it as it drops right off of that high. My plan here tomorrow is to get this thing off of that low and get in on the way back up to that high. Try to hold that runner as it runs back up. I'm not even trying to mess with selling off the high. I'll take my profit at that high, right, and then I'll wait for that one try, two try, and then back in from there. I'll look for that second try to fail, right, one try, two try, and then drop it in from there. Okay, these are always a bit tricky, again, because the momentum gets moving, and oftentimes it'll go up, one try, two try, and keep going. And if that's the case now we know we get a new bull trend, we'll find our new channel, and we'll be buyers now. Right? So we're buying the low of the range, and we're buying with proof of above the high of that range on strength. I know there's a lot to cover here right now, and I'm trying not to just be a fire hose of information, right, coming at you, but I want to make sure I give you as much knowledge as possible, right, on these ranges. Also, gold's been nasty lately. It has. So stay away from this middle. You can see it's very, very choppy there in the middle, right? We go up, one try, two try, failure, back down in. One try, two try, failure, back up in. And again, be careful if it rotates off of that low because it's going to be a very, very strong move going higher. Look to buy it. Hold that position on the way back up to retest that high. That's my plan on gold. And again, tomorrow morning, this is the market you want to worry about. This is the widowmaker tomorrow. Okay, this is the market that will take your money tomorrow. So be very careful on gold around non-farm payrolls. It's not going to be an easy session tomorrow morning before that news comes out. Again, hopefully I'm wrong. I hope I am, right? Hopefully I am. But again, non-farm Friday is usually pretty difficult on gold. And of course, a close second place for being challenging tomorrow will be the euro. The euro is bullish with a spike in range pattern, telling me to focus on buying opportunities down near the low of this range with a target back up to the high of that range. Now, we talked about this in last night's newsletter, right? We had this big bull channel. We were trying to buy a two-legged pullback and a retest of that high. Remember what I said earlier, right? Anytime we have, we talked about this, anytime we have a strong move in one direction, what happens? Two-legged pullback, retest of the high. Right? Anytime we see a strong move in one direction, don't fight the momentum. Okay? Two-legged pullback, retest the high. Okay, so we know that's what they're trying to go. They're trying to go back to retest the high. You can easily see they like that little low we had earlier. This is a little trading range from last night, right? They like that low, so this becomes a trading range. Right? I would assume we go back to retest the high, and ultimately we're looking for a couple scenarios here right now. I'm looking for either we go through it and keep going, or we pull back, we can buy it again, or we rotate up and then back down, we can buy the low, right? So let's dig in. On the euro, the plan is relatively simple. We're bullish. We have a target to go back to retest that high. That's the objective. You always have to know where the market wants to go before you take a trade. Okay, I call it the market's objective. Okay, and in most situations, in a trending environment, the market's objective will either be a retest of the high or low, it'll be a measured move, right, like we have here, or it'll be a channel rotation, okay, since we have potential for a channel here as well. Okay, those are really only three scenarios, right? A retest of the high. These are the market's objective, right? The three market objectives. A retest of the high, a retest of the measured move, which just happens to be the high. Okay, there's two birds with one stone, right? Or, right, it's a channel rotation, right? Which I have a potential channel drawn up here right now as well. Okay, so let's talk about this. Really, I want to get into this market before it hits that high, right? I want to find a way in before we get back to that high. So how do we do that? Well, I'm going to take a little high here, mark that up, right? A little channel there, buy that low. Okay, that's an easy way to find a buying opportunity before we get back to that high. Okay, that's the goal. Okay, pull back, buy off the low of that channel, right? And again, right, it'll probably end up being a little bit of a failure pattern, right? So if we draw this up like this, right, that's your channel. Okay, there's the moving average, right? So it'll probably look at this. Failure pattern at the moving average into strength into pullback, right? Pullback, going back up, right? So failure pattern, bears try to sell it below the moving average. Okay, failure pattern, strength into pullback, back up from there. Okay, again, you want to learn these patterns, right? Learn these patterns, grab that free trading class in the upper right-hand corner. You will not be disappointed, all right? So that will be the easy way to do it on the way back to these highs, okay? We'll see if it happens. Again, we got big news tomorrow, right? We'll see if we get that tomorrow, right? If it collapses back down, one try, two try, same thing, right? Failure, strength, pullback, back up. Same pattern we've talked about, right? The entire evening here this evening, right? So two try rule, failure, back up, and go from there. It's a seller failure, right? Into a bull pullback, going back up, right? And in all reality, it could go even lower, right? It could go lower, one try, two try, and then back up, right? This just like on the Nasdaq. I mean, it could be this whole area down here, right? This little rising support. This whole area here is ripe for the pickings. Bring it down, right, and back up, right? That whole area there is ripe for it, okay? So with that, again, one try, two try, failure, strength, pull back, and back up, or little tiny guy here, right, at the low of the little spiking channel, and then back up there, okay? Now, the hard part's going to be if you go back to the highs. If we go back to the highs, we're very bullish right now. I know historically we're bearish, right? Does not take a very skilled technician to see the overall bearishness of this market. Yeah, it's pretty darn bearish, right? It's about as bearish as the market gets right now, but not in the short term, right? For day traders, we are bullish. Okay, I'm not a swing trader. I'm not looking for a yearly move. I'm looking for short-term scalps, short-term intraday trades. Okay, short-term trend is most important. So we're bullish right now. So just like I talked about on the Nasdaq, right? As I said on the Nasdaq, if we go higher here, one try, two try, back down in, this is going to be a tricky pattern, right? Because you're going against that trend. What I'd rather do is I'd rather go up, come down, and buy that low again, right? Keep focused on buying the low of that range, or around the near the low of that range, right? As close to low of that range. Or we see a strength move higher, the moving average comes up, and we can look for what I call a fake out, breakout, pullback pattern. Use that prior resistance as support. Remember, get the moving average through it, and then look for that two-legged pullback. That's the key, two-legged pullback, right, back to the high of that range. All right, and then usually what that happens is that usually develops now into a new spike in channel, and then we can buy the next pullback to the low of that channel. Does that make sense? Right? So strong move up. How strong? Strong enough to get the moving average above. Two-legged pullback for the buy. Then we find that into a new bull channel, right? And looking to buy the low, right, of that bull channel. All right, guys? Fake out, breakout pullbacks, failure patterns, right? Easy stuff here as long as we get enough strength through that high. All right? So again, stay away from the middle. Buy low. Again, be careful trying to sell high. If you do try to take that failure into pullback off the high, right? Half size, quarter size, smallest size possible, right? Because the momentum is going higher here right now. All right, guys? And last but not least, how do we reverse? Strength, pullback, strength. Get to see a strong move down, pull back and hold, right? And then go. Once we get that, find that new channel, line those lows up. Remember, at this point, at this point, all you're going to have is these two lows. Okay, draw them off those two lows, up that high, wait for it, sell off that high. It'll usually be between that prior swing, somewhere in here. All right, guys, that's the plan for tomorrow. Hopefully this news tomorrow doesn't completely blast everything out. Again, tomorrow morning, we may see everything reverse. It may all slop up tomorrow morning, and I may need to redo the charts tomorrow. So come out and join me tomorrow morning. We open up at 8 o'clock Eastern time, Monday through Friday, right? Grab a free pass for it. I've got my free trial right on the homepage. As part of that free trial, I'll send you a free trading class. I'll also send you an invite on our free pass. Come out and join our trade room as a guest. All the links you need in the description of the YouTube video, right? Or you can go to schooloftrade.com, right, to learn more. While you're here, don't forget, we've got beginner, intermediate, and advanced classes, and I am always here to help you guys out on live support. Call the office. That phone number is right there, right next to my ugly mug, and I'll see you guys tomorrow morning, 8 o'clock. If not, be very careful tomorrow morning. Please, please, please. Again, save those bullets for Reaction Monday. If I don't see you guys tomorrow, no newsletter tomorrow night. I'll see you guys same time, same place on Monday evening, next Monday. Enjoy the weekend. Who you got out there? Who's going to win the NBA? Who's going to win the NHL Stanley Cup? Oh my goodness, I can't decide who to root for right now. Who does not want Vegas to win the Stanley Cup right now? Well, I would just as much like to see the Capitals. I mean, how can you root against the Capitals right now? It's insane. I can't decide who I want to win the Cup this year. I think I'm leaning towards Vegas because, are you kidding me? Expansion team, Stanley Cup, the freaking desert? Are you kidding me? And also, too, I can't wait to see how the NBA Finals is going to go. We get some great sports this weekend. So enjoy, rest up, refresh. We'll see you on Monday. Who you got for the Finals? Can LeBron pull this out? I don't think he's got a chance. I'm rooting for him, right? But I don't think he has a chance. Those Golden State kids are really, really good, man. All right, anyways, I'm out of here. I got to run. Be well. Be nice to each other. Will you have some fun this weekend? And I'll see you next time. Adios, amigos.